Hey guys, February is over. I was going to do a market update and just run through some numbers with you, give you an idea of what's happening here in Utah. Hopefully, it gives you enough information that just helps your decision making whenever you're looking to buy or sell in the spring. And I'm going to show you just the things that I watch and the things that help me make the best decisions for my clients and give them just real estate advice. So. I'm going to share this screen. The first thing, let's run through this chart real quick and talk about where the market's moving and how these different metrics should help you with your decisions. First is days on market. We're at 55 days on market here in Salt Lake City area. That has been going up since May, and interest rates increasing, and we've watched this just tip up, tick up, tick up. And the great news is that this month it flattened out, right? Which is this the indication that the market's at its low and it's going to pick back up again in the spring? We don't know quite yet. Don't pay attention to this number. This is only based on 2 days in March. So this number is always moving. These are set in stone, and these give us a much more clear understanding where the market is. So when you see days on market and you hear 55 days, that feels extreme compared to the last 2 years where everything was selling, going under contract in the first week. We're now 55 days from a home to be listed to go under contract. A lot more close to a normal market here in Utah. 43 days back in 2020, 19 days back in 2019, and that's pretty typical for a market. So we're a little bit above what the average or what a normal market is here for Utah. What I would expect is what I'm really wanting to see is March is going to tell us whether we hit the low or not. And it's a lot of it has to do with interest rates. Interest rates are at 7 right now. That's a 4-month high that devastated us back in October, November. No one was putting offers in during those months, and it really slowed down our market. Well, we are there again, but we're in the spring. So I think it's really important, if you're going to make a move this next year, if you're wondering if this thing's going to continue to slow down and I can buy at the low, or whether I can sell, if I'm selling at the low, March is going to tell us that, I think. So next is just sold count. Typically we see, again, you can see March is where the market starts to heat up, and we see buyers start to jump into the market and transact. February, we saw that little uptick. And the question is, what's going to happen in March? Is it going to flatten out? Is it going to be more drastic? Again, that's why I'm really trying to monitor this month and check. Sell the list price. This is a great matrix for you if you're a buyer or a seller. It just gives you some kind of indication of what kind of offers you should be putting in or accepting. Right now, this last month, offers were coming in and being accepted within 5% of asking price. And that's great because we look back into the fall and things were going under contract and closing nearly 10% below what their original asking price was, right? So say, for instance, you put a house up on the market at $790. Well, it's very likely that it's going to sell at that $700 mark. But the great thing is that in February, market started to update. That really is a piece of interest rates dropped down to the low 6s and the high 5s. And what did we see? In February, the beginning of the month, we saw multiple offer situations, and we saw showing time schedule just uptick. I had a listing that's been on the market for the last 6 months. You think it would be slow at this point, and interest rates hit that 6 mark, and we got 2 offers come in, and we got we got 15 showings in 2 weeks. So I think that is the real big matrix for you to watch and see what's going to incentivize buyers to come in. Either that, for you're a buyer, that means that's when people are going to start competing with you. If you're a seller, that's when, hey, maybe you don't have to offer concessions and pay for buyers' closing costs or their buy down their interest rate. If you're thinking that you're going to sell your house at asking price right now, that's just not the market that we're in right now. There's typically 1 or 2 price reductions in there just because the market's been moving and flowing with these interest rates, and you've got to make adjustments to where the interest rates are. So it'll be really interesting in March. I think we could possibly get back to a market that is coming in at asking price, and sellers are having to make less concessions than they are right now. Median sold price, we've seen this last month, it was at 520. Here's the good and the bad. The bad is we've seen prices drop since May of last year, and that's all been created by interest rates again, right? Well, we're hitting that tipping point where inventory is low enough and interest rates are high enough that I think we're either going to baseline if interest rates stay high. I don't think they're going to go much lower, our median sold price, just because our inventory is so low right now, and there's not a lot out there. Is inventory going to go back up if interest rates stay at the 7? I don't think so. I think you have a lot of people, say like myself, that are sitting at a 2.9 interest rate. I don't want to sell my home. I'm much more incentivized to rent my home out and go find the home that I want, rather than to sell it at the low and lose that low interest rate and jump into a 7% interest rate market. They're just not going to do that. So inventory is going to stay low, and it's really going to start to keep home prices at bay from dropping any further, is what I'm expecting going into the spring. On March 24th, the Fed meets again. They're going to discuss, I think it's the March 24th or 23rd, and that's when they're going to talk about inflation and whether inflation's dropping or not. That's going to be a big indicator on whether interest rates drop back down to that 6% mark again, and we go into a great spring. So again, I think the best thing you can do is just monitor past numbers and see. Last thing I want to show you is, best thing is I think you can look at these numbers, try to give some kind of idea of what's going to happen the next month. Anybody who's telling you what's going to happen by the end of the year, at this point, nobody's been right. I think it's all smoke and mirrors, and somebody's talking about something they really don't know. We do not know what the Fed is going to do each month. We don't know how the market is going to act based on these numbers either. And you could just see this is all different than what we've seen the last 5 years, last 10 years. It's really a strange year for real estate across the country and here in Utah as well. Last thing is just, as I was talking about inventory, I wanted to show you, typically we see inventory start to jump up in February or flatline and stay the same. It's not doing that. Inventory typically jumps in February. It's been decreasing. People are still putting offers in on houses. Things are still selling right now, even in high interest rates. But what's happening is less people are listing their homes, and less builders are starting new projects right now. And that's what's really, if you're a seller, that's great news for you, because there's still somebody out there who's going to buy your house. If you are a buyer out there, it's a plus and minus. There's not a lot to look for. There certainly is more than this last 2 years, but historically, it's really not a lot of inventory, and we're afraid, hey, if this continues to drop and interest rates do shoot back up, we're going to throw ourselves back into a 2021, 2022 environment all over again. So my suggestion for you is stop sharing. There you go. Make sure that you are just monitoring those interest rates when they hit that 6% mark. That is the sweet spot, I think, that you can still get a seller to offer concessions. Do a 2-1 buy down. Buy your interest rate down for the first 2 years. First year, buy your interest rate down 2% the first year, 1% the second year, refinance year 3. And you can get them to do that, or pay for your closing costs, or just do a flat interest rate buy down, and then refinance in the future. You need to talk to your lender and make sure they run those numbers for you. The next thing is just to keep me updated on the listings that I'm showing you. If there's anything, I tell there's not a lot of inventory out there. So if there's something that you want me to go out and find, if you're familiar here in Utah, hey, I like this neighborhood and I want that house, I'll go knock on that door for you and I'll try to tell them I got a buyer that's interested. You never know. So when we're in a low interest rate or when we're in a low inventory environment like this, I'm okay with going and finding listings for you and looking for those things. So make sure, just give me some kind of feedback of what I'm sending you, if it's meeting your needs or if I need to make some kind of corrections on the listings that I'm showing as well. Got any questions on any of this? I'd love to have a conversation and make sure that you got all the answers to your questions. Thanks, guys, and looking forward to talking soon.